Bottom line in all this on the debt ceiling extension is, what is it going to cost me? What's it going to cost you if a deal is not done in time? Chief Washington correspondent James Rosen is here with some answers.
Brett, good evening. Once again this morning, President Obama made this connection between the debt battle that's playing out in Washington and debt to me.
A lower credit rating would result potentially in a tax increase on everyone in the form of higher interest rates on their mortgages, their car loans, their credit cards, and that's inexcusable.
Translate that from Beltwayese, and it means more debt to me. Here is why. This is all uncharted territory, but economists have estimated that if that happens, the Treasury Department would swiftly raise the yield on its Treasury bond offerings by about half a percentage point. Why? Because Uncle Sam has suddenly been stamped on the forehead as a riskier borrower, so he has to make his bond offerings more attractive for investors. The banks will see that, and they'll want to prevent their customers from taking their money out of the bank and putting it in those suddenly higher yield Treasury bonds. So now the banks are paying more interest to keep all those deposits in their checkings and savings account, and the banks are going to pass that interest cost onto the borrowers. So let's say you need a car loan. Well, your interest rate is going to jump by about half a point, up to about 4.5%. Your monthly payment will therefore go up, we calculate, by about $2 a month. Doesn't sound so bad, but remember that projection is based on the median car loan in the United States, which is $10,000. Lots of people borrow more than that for their car and consequently will pay more per month. What about your home loan? Let's take a look at that. The median debt on a home in this country is $165,000. Remember, it's much higher here in the nation's capital and in other big expensive cities, but based on that figure, if your interest rate spikes up by half a percentage point to 5 points, then your monthly payment is going to go up by about $50 per month. And that's going to cost you about, we calculate, $500 more per year.
That would push down the number of buyers for particular types of houses and put the real estate market into even more of a slump than it is today.
And keep in mind, there are some interest rate hikes we didn't even talk about, like credit card rates. These are some of the real-life consequences of this extraordinary political drama that has been grinding on between the president, the White House, the Treasury Secretary, and both parties on Capitol Hill. And that's why you can look at these people, regardless of party, and say, you are debt to me. Brett.
James, thank you very much. We'll have